Hello everyone, my name is Matthew Frailey with BreakpointTrades.com. We've been bringing some of the best technical analysis on the internet to our subscribers, individual traders, as well as professional institutions since 2003. And if you haven't done so, please subscribe to our YouTube channel. Consider also subscribing to our service. There's also, if you're not ready to pay, you can go to the bottom and we have a free newsletter. Subscribe to that. I think you'll be very happy with the content. So let's go ahead and get started here. So this is a technical review of the markets, and I'm recording this on Thursday evening, October 14th, 2021. A lot of you will probably be reviewing this on Friday, which is fine, guys. This, should serve this video should serve through Friday and, of course, the weekend. All right. I haven't done a video here for a few days on YouTube. We do detailed newsletters every day of the week. So obviously we don't put all of our content on YouTube. So it's been a few days. Thought it was time to give you an update on the markets, especially with Thursday's big rally. All right. So again, this is a review of the markets after Thursday's actions. Here's the table of contents. We're first going to review the general markets, S&P and the other indexes. We'll look at a few indicators. We'll also look at the dollar, commodities, precious metals, which have been having a really good rally lately, especially the stocks. Also reviewing some trade ideas. Again, big follow-through day on the market, good breadth. The S&P rallied right back to its 50-day moving average. The Qs are testing the downtrend line off the September lows. All right. So let's go ahead and get started. So here's what transpired today, our index sector table. And again, you can see with the indexes, they were up anywhere from 1.5% to 1.9%. And they're all positive for the week. And we follow 21 market sectors. You can see it here: transports, banks, financials, energy, technology, you name it. Every single sector was up, so it was broad-based breadth. All right. The dollar was actually flat today. Cryptos were up just slightly. Now, commodities all had a good day, except for sugar, which, again, doubt any of you guys are trading sugar out there. I certainly don't. Copper had a fantastic day, and it's had a great week. But I'll be showing you what the commodities did when we get to the charts below. Precious metals have had a good week. Remember, they were in the doldrums for quite a long time. So we're going to review those. Silver came roaring back today, up 2.2%. The gold stocks versus GDX, they've been leading. You can see they're up 7% for the week. All right. The stocks lead, guys. When they lead, that's positive for the overall metal. And of course, bonds down here. Both TLT and high yield corporate were up today. Long-term rates were down. Market liked that. Next. Let's go and jump to the charts here. So this is a chart that I showed in my Wednesday newsletter. I showed this potential inverse head and shoulder pattern. Okay, and this was before Thursday's big rally. I said we have a potential inverse head and shoulder pattern. Some of our subscribers also saw the same pattern on Wednesday. It's not a great textbook inverse head and shoulder pattern with a sloping neckline. It's probably really more of a diamond, but regardless, you had a higher low in place, looked good for a long with a stop essentially right here at the higher low. So today we had a big gap and go rally, took out the downtrend line, and looks pretty good, right? You had nice positive divergence here at the lows. This histogram went positive. So everything was set up here for a rally. And typically when you have a well-defined downtrend line like this, you'll gap up in the markets. All right. So if you're long the S&P related ETF index, easy stop can go right here. Now, big question is, is the market simply just going to, rally right back to the highs? Is the lows in place? Did we simply have an A, B, C correction and that's it? Or is it going to be a little more complex than this? And I'll show you what I'm talking about below. Let's move on to the other charts. So here's the daily view of the 5 key major indexes today. Here's the Dow, closed right at this trend line resistance. S&P took out this downtrend line from the highs. Nasdaq, as I showed you the other day, had this perfect support here, which was previous resistance back in February and April, became support on July, and of course, October. The Russell has been stuck in this rectangle horizontal range, and it had a coil with inside here, which is right at the top of the coil. So let's go ahead and move on. So obviously a nice day for the indexes. Now let's go ahead and look at the individual indexes in more detail. So here's the S&P. We'll start with that. You can see we rallied right to this 50-day moving average. There's two 50-day moving averages here. I have the SMA and the EMA. Okay. Remember, they were acting essentially as support most of the year. You know, we get little Pinocchio moves through it, below it sometimes, but we always recovered. We thought times would be different in September, and they were. We ended up slicing right through the 50-day moving averages, formed a lower high, came down. Again, the bullish view in the market is, you know, one view is we completed the correction here, which we talked about, A, B, C, and we're ready to go, you know, to new highs. All right. There's another view, which we've been talking about, that could lead to a more complex correction. Now, I do believe the lows here are in place, guys, but we could form more of a this whole thing could be a fourth wave triangle as well to frustrate both the bulls and the bears, and I'll show that below. But either way, if you're long, this higher low would be an easy stop. All right. Let's move on. Chart number 6. Here's what I'm talking about. A scenario where that could frustrate both the bulls and the bears. Okay, this is this complex fourth wave correction. So we've had that nice move off the lows. You know, we could rally further up. This would be well more than a 61.8% retracement of this decline, right? So everyone would be super bullish by then. Only for the market to come down again. It would still not take out this last higher low that I just showed you, right? But it'd get close. People get bearish again. They would think we're going to break down and go to the 200-day moving average, right? Then rally up again, you know, just chop the hell out of everyone. Again, don't worry so much about the time frame here, more the pattern, but, you know, this could last, say, perhaps into November, and then you get your typical end of year rally. So this is definitely a viable scenario, right? So again, there's two options I see in the market, that we go up and we break out, or we go into this more complex sideways coil, which I'm kind of favoring that, but I am favoring more upside here. Next. Chart number 7, here's the 2-hour chart that I showed on Wednesday's newsletter, this inverse head and shoulder pattern. And you can see we had a big gap in the morning, pushed higher, broke right through this downtrend line. We made it right to the 61.8% fib here. So this is the retracement from the September highs to the October lows. All right, so this is an important fib. We rallied right to it. We're a bit overbought in the short term, so do we... You know, the question is, do we bust up right through it, or do we pull back first? Now, since we broke this downtrend line, this is now support. So if we pull back here, I think it's a buying opportunity, because I think it'll go up then. Or we break up first, then pull back, then rally. Again, like I said, do we go back and make new highs right away, or do we go in that more sideways coil pattern that I showed you above? Let's move on. Chart number 8, here's the 60-minute chart that I've been showing for quite a while, this nice clean channel. Back in early October, we had this coil pattern, which resolved the upside on a gap. By the way, guys, one thing you'll learn with these index trading, whenever you set up to these well-defined patterns, many times the indexes won't just go through these intraday. They'll gap over them, okay? And that's important because let's say you saw this coil and you wanted to go long. You're like, all right, I want to go long once it breaks the coil. Again, guys, I learned this from experience. Usually you won't get just a move right through the trend line. You'll gap over it. So what I've learned over the years is that if you see a coil like this and you think it's going to break out, buy it inside the coil, because many times you'll wake up in the morning and price gaps way out of it and you have to chase it. So best just to take a shot inside the coil if you think it's going to break out, because you'll get these gaps. All right, gap recognition gaps. So we gapped up, we stalled right at the downtrend line here, pulled back, we retraced quite a bit. This retracement was a 61.8% retracement of the move up here, which I'll show you on a 15-minute chart below when we get to that. But get a nice ABC pullback here. Remember, pullbacks and uptrends are zigzag. So if you know you're in an uptrend, look to buy wave C's. Okay, and then we rallied up, took out the downtrend line here, which again is now support. You get your 61 fib right here, which I just showed you on the 2-hour chart above. Little overbought in the short term. RSIs are pretty extended. Of course, I mean, we can't push a little bit higher here first, say on Friday. Next. Chart number 9, here's a 30-minute chart showing you the same channel. Okay. Market, one thing you learn on the market, guys, you've always heard that gaps like to be filled, and they do. So this gap here, open gap, was a magnet. We didn't quite fill it back here, but we filled it today, essentially. All right. And we also had an open gap here, which was filled on the downside. Now we have an open gap here, but I don't think that's going to be filled anytime soon. All right. Maybe if that complex correction sideways coil that I showed you on the daily chart above, if that plays out, the next time price comes down on a coil, maybe it'll fill that. Next. Chart number 10, here's the 15-minute chart, shows you the same thing, but you can see how that ABC retracement basically retraced about 61.8% of the move off that coil low. All right. Pinocchio through it a little bit. Again, the sign that the market could have a good day on Thursday was on Wednesday when we broke through this channel. That's when I went long, was on Wednesday. And of course, we had the big power gap today and rally up. Bit extended here on the ribbons. You can see the moving average ribbons. They're a bit wide. Moving average ribbons, as I stated before, the times when they get too wide like this, you tend to get pullbacks, reversion to mean. When they're pinched, that's when the energy is pent up and you get your big moves. Finally, chart 11 is a 5-minute view. And this is an education. Our subscribers have known this for years. It's one thing we've taught. So what I call this is a trend day, and they're very repeatable. So the market gapped up on Thursday, big power gap. Now, a lot of people are scared to chase gaps in the morning. I like these trend days because usually in the first 5 to 10 minutes, I can tell if it's going to be a trend day. What a trend day, what I define is when you gap up, price does not try to fill that gap. It holds right up. And these trend days, what they'll do is they'll typically rally up for the first 2.5 hours to about midday, usually about 12 p.m. Eastern. Then you get your sideways consolidation pullback for about an hour. Then you'll push again to one more high in the late afternoon, then maybe a little weakness the last hour. Okay. The reason why this is important because these trend days are almost always play out like this. And that's important because let's say you're not long coming into a day like this and you recognize that it's a trend day. Like I said, we usually recognize this within the first, say, 10 minutes or so of the market open. You can just go ahead and go long here, even though you had a big gap up. So if you go long here at 4,400, I mean, you know, the S&P still rallied up another 40 points. That's still a damn good trade. All right. So these trend days are actually very profitable. Even if you don't come into them long, you could simply buy the gap. Okay. Next. Let's move on to the triple Qs or the triple Qs. They had a nice rally today. You know, testing the downtrend line from the highs. They're still below the 50-day moving average, unlike the S&P, which is right there. This is your big resistance area. As you know, the triple Qs had a pretty nice symmetrical ABC correction. They basically hit a target. Moving average ribbon is obviously still hasn't flipped back to a bullish configuration. Back here when it was pinched, that was a good short. And they flipped bearish here. Again, they still have proving to do. I do think this is a decent low, but we want to see this continue to follow through. Next. Chart 13 is the 60-minute view. So this is a great example. This is the chart we were showing on Tuesday to our subscribers. So when you have a well-defined downtrend line like this, what the markets will tend to do, and remember I discussed this on the S&P above, you know, if you see a pattern like this, if you think there's a chance it's going to break out, go ahead and go long inside the pattern, guys, because what will happen is the market doesn't make it easy. You know, it's not just going to go through this downtrend line on an intraday basis. What it'll do is just gap up in the morning, gap well over the downtrend line, and you have to chase it. Okay. So that's what happened today. Again, it is fine to chase it. It went higher. It's one of these trend days, but best to buy inside the pattern if you think there's a good shot that's going to break to the upside. You can see it's retraced about 50% from the highs. The 61.8% fib here is a big important area. And there's still an open gap on the triple Qs to fill. You can see up into here. So to me, this would be a nice target in the short term for the Qs. Next. Chart 14, here's the 15-minute view of the triple Qs. So you can see how important these 61.8 fib areas are. On Tuesday, Wednesday, that's where we found support. Also, a perfect symmetrical zigzag, symmetry pullback. Next. Chart 15, here's the FANG index. Remember, this contains a lot of the FANG stocks like Apple, Facebook, Netflix, etc., Microsoft, that, you know, they have such a big weighting for the market. So this is at a perfect ABC type correction pullback. Lows in place there. And today, closing slightly above the 61.8 fib there. That's a positive. Next. Moving to the small caps, IWM, Russell 2000, as you know, since March, it's been stuck in this big channel. We've had really two coils inside the channel. Your bigger coil right here, the dotted lines, and a smaller, tighter coil within the coil, so a fractal. We gapped out of that smaller coil today. Again, I think the market holds up. I think small caps will do better percentage-wise than the other indexes the rest of the year. If you want to be long to Russell, stop right here at this higher low. So that does it for the indexes, guys. Futures are up a little bit tonight. ES is up about 11 points, so we'll see if we get a little move higher in the morning on Friday. Next. Looking at the VIX here. VIX down on Thursday, as you'd expect of the market. Now, the lower Bollinger Bands are down here. The VIX a lot of times likes to tag the lower Bollinger Bands and bounce off of it, so be aware of that. If we get a little follow through on Friday morning, we could get that, and then the market finally might want to consolidate if the VIX tags that lower Bollinger Band. Next. Chart 18, here's the Nymo Mcclellan Oscillator. I commented on this on the weekend, but you also see this in the Nymo. So in my observation, whenever the Nymo spikes over the upper Bollinger Bands, you're overbought, but it's also strength. That typically is bullish on the market. It typically tells you that, you know, you may get a pullback, but that pullback will form a higher low. Next. Looking at TLT 20-year bonds, they've rallied from this oversold condition. As you know, they were in this complex ABC sideways consolidation back here. Bouncing into here, rates have pulled back. Now this is some resistance up in here, so it's possible it could form a lower high up in here and pull back again. Next. Chapter 20, high yield corporate, JNK, nice recovery here. Powered right through the 9 and 20-day moving averages. Ribbon's still negative here, but would expect that. You know, if we got a decent low in here, it's possible this forms a something like this, maybe. Again, this is all predicated that something doesn't blow up in China or whatever, all right? Market is in earnings season now, typically holds up in earnings season, so we'll see if that's the case or not. Next. Moving on to commodities. So commodities, as you know, guys, I've been bullish on commodities since last year. I said 2020 would be a very bullish year for commodities. They're in a secular bull market, and it's been mainstream. You see commodities talked about all the time in the media, all this rampant inflation, blah, blah, blah. But this is something we saw last year. So commodities continue to be on fire. This is DBC, the general ETF. Next. And chart 22, here's crude oil, continues to power higher. Expecting a lot higher prices in crude oil over time. Let's take a look at the bigger picture chart. So here's a monthly chart of crude oil. So peaked back in 2008 at $150 essentially. Was in a secular little bear market. Let's see, it broke this downtrend line, and it took out a resistance here. So earlier this year, 2020, breaking this long downtrend line was positive for it. And again, we just took out a resistance here. Not a lot of resistance, quite honestly, until you get up to 95. I could see it working up to there over time, pull back, and again, I think beyond in 2022. Wouldn't be surprised it gets back up into those areas. Next. Chapter 24, copper. Copper we've been showing in this tight coil pattern, and I've been stating that I thought copper would soon have its day again with the other commodities. You could, first off, look at the moving averages here. You see how 200-day, 50, 20, all bunched up here. So that happens when you get these coil patterns, and resolved strongly to the upside on Wednesday. Big follow through today. You can see your ribbon is flipping. This looks super bullish, guys. Next. Chart 25. So, you know, besides some copper stocks like FCX, Freeport McMoran, you know, CPER, tradable ETF. That's another way to play it. Again, I think these will only go higher for time. Next. Chapter 26, uranium. As you know, I was super bullish on uranium back in December of last year. It's had a hell of a year. It's had get another nice opportunity here, this ABC correction. A lot of us were lucky enough to buy it back in August for this big move. Took profits. And again, I stated on this pullback, looked like another buying opportunity on the ABC correction. Buy ABC corrections, guys. All right. So it quickly rallied back up, made a new high. Again, quite extended here. Still way extended above the 9 EMA. So this is not a low risk area to be buying. Again, guys, your low risk areas to buy, right, are, you know, ABC corrections, some correction here, long consolidation, trend line break, coil patterns, whatever. Not here. Even though long term, you know, I think it's going much higher. See how the moving average ribbons got very wide here. Take profits. Pulled back here, pinched. That's when you want to buy. Next. Chart 27. Here's a weekly chart. So you can see why I was super bullish on uranium last year. You had a multi-year trend line basing pattern that it busted out of here in late 2020. Look at that. Moving average ribbon, super pinched. Everything was set up. Pattern, ribbon, etc. You broke through here in good volume. So basically, you know, the thing to do thing to do was buy a position here, take some profits over time, buy these dips in 2020 this year. And of course, this was your best dip. That was a great buying opportunity. Then you had another buying opportunity right here. Moving on. Precious metals. Let's look at gold. So gold has had a nice little ABC rally up to here so far. It's got major resistance here. But guys, here's a clue that back in here that gold would start having a nice move. This is the GDX GLD ratio. What that tells you is it measures gold stocks to gold metal. The stocks lead. So when you see the ratio declining, stocks have underperformed. When the ratio is up, stocks are outperforming the metal. So the time to own both the metal and the stocks is when the stocks are outperforming. They lead. And so this was standing out over the last few weeks that we pointed out to our subscribers. Okay. So gold's rallied up to here, resistance. What I think we're going to see is, draw that in, either break out of here and then pull back. This broken trend line now is active support, or we pull back here and then bust it. That's what I think. All right, let's clear that out. Moving on. Here's the weekly chart of gold. Again, you can see it had its nice basing pattern back here for a few years, 2016 to 19. Busted out here, move up, pull back, move up, consolidation. Big move here, got very overbought. I don't have a moving average ribbon on this chart, but if you had a moving average ribbon, it's going to be very wide there. And it's been in this long consolidation here, but notice you got this big support area that was defended all year long, 2020. This is your big resistance. If we could bust through here, it could be off to the races. Next. Chapter 30, the monthly view of gold. Again, guys, so let me talk about this. A lot of people have been saying gold is dead. All right, maybe they're right. Maybe all the gold bugs have converted to crypto nuts. Okay, that's the theory out there. Or maybe, just maybe, gold is going to have its day. That's what I think. I think gold's going to surprise people. So gold had a bull market from, say, 2001 to 2011. Then it entered this long bear market. Spent a long time forming this rounded multi-year base. Broke out of there. Got very extended here. Look at your ribbons. Super pinched here. Notice how that correlated with this breakout. Nice bull trend run there. Very wide. That corresponded with the high here. It's been a nice consolidation. Moving average ribbons aren't pinching like they were here, but they've come in. So we have a potential ABC correction on a 2-year basis. I think there's a chance, guys, that this gold could possibly break out in 2022, have a big year, well into the 2000s. Let's see if I'm right later on. Well, obviously, I'll continue to follow up on this with you. Next. Chapter 31, here's silver. Nice day. Starting to break out of this little channel. Not going to look at the bigger charts at this moment. Let's move on. Chapter 32, platinum. I pointed out to our subscribers early in the week that platinum was looking good. It's been downtrending here all year. It finally broke a nice clean downtrend line here, corresponding with the 50-day moving average. Nice, really moving up. Your ribbon's starting to flip here too. Next. Chapter 33, GDX. GDX, as I told you, the stocks have been leading here for the last few weeks. That was positive. Rallied up here. It took out the downtrend line and 50-day moving average. Super bullish. Here I added fibs from the recent highs, so these could be your next little potential targets. Again, it is getting a little overbought here, guys. So, anytime this could pull back. Now, notice this. We have a potential left shoulder head. If we get a pullback consolidation, we could form a right shoulder. Boom, and then have a bigger rally. So, If you've been lucky to catch some of this uptrend, great. What you want to do is start locking in some profits soon and then look to buy a higher to low pullback. That'll be your low risk swing if we can form a higher to low right shoulder inverse head and shoulder pattern. Okay. Next. Short term, here's the 60-minute chart. Back in September, I showed this falling wedge, which obviously played out beautifully. But are we seeing any divergence? None in the MACD, so that's a positive. We are very stretched. RSI indicators are buried, overbought. But there's no divergence, so what we may do is pull back a little bit. When I don't see typically a MACD divergence, what I usually you'll see is maybe a little pullback and then another push. That forms the MACD divergence. Then we get our bigger consolidation like that. Okay. Again, no MACD divergence at this point, but very stretched. You can see it on the ribbons too. Next. Looking at some individual names, HMY was one I was super bullish in back in September, late September, early October. It had what I call just a beautiful textbook falling wedge. Here's what falling wedges, the best of them have. You have 5 waves, A, B, C, D, E. If you can't count 5 waves, it's not a proper wedge, guys. All right. You had MACD divergence. Everything was set up here. Hell of a move. Awesome pattern. You know, eventually lock in some gains. This sucker pulls back, forms a higher low. I'll be adding back my position. Next. Chapter 36, IAG, another gold stock I really liked. Had a nice little basing pattern with good volume patterns. It's had a heck of a move out of here. Next. Chapter 37, RGLD. It's been hammered this year. I pointed out some 5 RSI divergence. And you can see it's had a nice little move. Beyond that, though, not much of a pattern. So this is one I would look to take some profits and buy it back on a pullback. Next, chapter 38, Newmont. I showed this nice falling wedge on the weekend. It's played out here so far. You can see how the ratio had curled up nicely. Next, chapter 39, BTG, another gold stock. I showed on Monday. Nice breakout of this pattern. I like the volume patterns. So, again, guys, if you get a pullback soon, you could look to buy that. All right, let's look at other ideas, trade ideas. So Facebook or FaceCrook, as you know, heck of a correction. You had an opportunity. We pointed this out back on Tuesday near the 200-day moving average. So far, just a rally back to the 9 EMA. We all know the issues with Facebook, but 200-day moving average was at least a trade opportunity there. Next. Chapter 41, PRCT. We identified this tight coil back last week, and look how nicely this trade idea has played out. This was your break here, around the 39.50. Nice move. Now look how extended it got with these moving average ribbons. When you see something like that, take profits. RSI is overbought. When you have these coil patterns, your moving average ribbons are typically pinched. Energy's ready for an explosive move. When the moving averages get too wide, prices exhausted themselves. Next. Chapter 42, AMD, one of my favorite stocks. Perfect A, B, C, D, E falling wedge. I identified this to our subscribers on Tuesday and Wednesday. Nice follow through. This still looks higher longer term. Next. Chapter 43, LXRX, another long idea. This was from last week to our subscribers. Nice push up. You can see how the moving average ribbon pinched there. Next. Chapter 44, Angie's List, one I showed on Wednesday as a new idea. Clean resistance here on a 60-minute chart, 13. So give you a nice clean trade through there. Still looks higher. Next. Here's some new setups, guys. So NVIDIA, coil-like pattern. Testing a little trend line, downtrend line here. Next. Chapter 46, Costco, beautiful coil. I like these coil patterns. Look at your moving averages, pinched, 20, 50, pinched. Everything's set up here for a good move. Next. Chart 47, AMC. You know, the Robin Hooders. I couldn't think of the name. Anyway, little setup here. If we can get through there. Next. Chart 48, Netflix. Bull flag setting up. Next. Chart 49, Zebra. One Motley Fool picks. Nice little clean setup here for at least a trade. Next. Chart 50, DPRO. Resistance trend line here for a trade. Next. Chart 51. Oh, BABA. Actually, this is the wrong chart. Let me clear that out. So here's BABA. This was the long idea of mine back in early October. Beautiful falling wedge pattern. MACD divergence played out well. All right, guys, that'll do it. So we'll see what happens on Friday. And again, a lot of you guys are probably reviewing this video on Friday, which is just fine. So we'll see how this action plays out, and I will be giving you an update video on either Sunday or early next week. Take care, and enjoy your Friday and the weekend.